Hi there, Francois. Hi there, everyone. We're starting this time around with a smartphone rivalry between Apple and Samsung because that rivalry is heating up in China. The world's biggest network operator, China Mobile, started selling iPhones for the first time on Friday. It follows years of attempts by Apple to get a bigger foothold in the Chinese market. The American electronics giant has been trailing Samsung there, and Apple is hoping that China Mobile, with its more than 700 million customers, will change its fortunes. Delano D'Souza has more.
After a 6-year engagement, it's finally happened. China's largest mobile operator began selling Apple's iPhone to millions of customers. It ends a long wait for the technology giant, eager to increase its market share in China. The company believes the country will be its biggest market in the future. According to some, how well this partnership does will only be seen with the release of the iPhone 6 out later this year.
You got to think, like, you had the iPhone 5 out for, more than a year. And it's just now coming to China Mobile, so it's not new enough, right? It doesn't have enough wow factor anymore to really move the needle, even at China Mobile.
China Mobile has a customer base of 760 million and is currently rolling out what it says is the world's largest 4G network. Analysts say 4G connectivity is crucial to the success of the iPhone in China. Meanwhile, China Mobile will have to persuade existing customers to pay higher prices for 4G services.
It only took the 3G network 2 or 3 years to attract 200 million users, which is very quick. So I think the development of 4G from its initial phase to its maturity won't take long.
Analysts warn that Apple risks trading competitors offering a range of phones at cheaper prices. In the third quarter of 2013, Apple had 3.5% of the smartphone market in China, falling behind rival Samsung with 18%.
And we are getting reports of a muted response to the iPhone launch in China by China Mobile. And that may be why Apple shares, they're trading lower this Friday. That in turn is putting pressure on the Nasdaq this session. The other indices over in New York are mixed this hour, with the Dow Jones Industrial Average up around about 0.4%. The courier company UPS has also come out with a profit warning, and that is putting a little bit of a dampener on trading. Let's also take a look at the state of European stock markets on Friday. All three main indices in Europe closed with gains, with the FTSE in London up 0.2%. Now, that came as British stocks got a boost by shoppers that kept on ringing the tills during Christmas. Retail sales in the UK jumped 5.3% in December in comparison to the same month in 2012. This was the fastest growth in the UK market since October 2004, and it is fueling hopes that the economy as a whole is perking up. There wasn't much of a perk for shares in Royal Dutch Shell, though. They fell back after the company issued its first profit warning in 10 years. Shell said its fourth quarter earnings will come in near $2.9 billion. That's $1 billion less than forecast. Shell blames security problems in Nigeria and also higher costs for exploration. And earlier in Asia, shares in Nintendo closed 2.5% lower. The game console maker has warned that it would post a loss during its current financial year. It's also slashed its annual sales targets for its portable Wii U game console. The maker of Donkey Kong and Super Mario Bros. Predicts it will sell just 2.8 million Wii U's. Previous forecasts were for 9 million sales. Now, the gap between the French government's income and its outlay was 75 billion euros in 2013. It means that the budget deficit is heading lower, but not as quickly as previously promised. As late as November, the government thought the 2013 figure would be 2.7 billion lower. Budget Minister Bernard Cazeneuve blames lower than expected tax receipts for the deficit. France is under pressure, of course, from the rest of the European Union to bring down that budget deficit. And we're going to finish up with an invention that Google says will improve the lives of diabetics. Google has unveiled a contact lens that keeps track of its users' blood sugar levels. The lens does it by measuring glucose levels in tears. It could be a relief for diabetics who have to jab their fingers to measure their blood sugar levels. Google warns that it will take up to 5 years, though, before this lens actually hits the market. And this is seen to be part of Google's push towards wearable technology. As you may remember, of course, they're looking to commercialize the so-called Google Glass this year in 2014. That's a pair of glasses that you can essentially use to take pictures and get other data from the internet. And with that, I'm going to wrap up the business segment. Look at that, Francois, a contact lens that measures glucose levels. That's pretty fascinating.
It is indeed, and Google definitely extending beyond the virtual world at this